Well, last week was an absolute blockbuster after Jerome Powell stirred the pot with his semi-annual monetary policy report by indicating rates would need to stay higher for a longer period of time. Then there was the Silicon Bank chaos. As you can see on the chart behind me, the stock plummeting 75%, which plummeted global stocks as well. Then it was just a small matter of that US non-farm payrolls data. The action continues though, as traders tackle week 11 of the financial calendar. Hello, I'm Connor Woods, market analyst at ForexSignals and howtotrade.com. Here is our weekly preview for the 13th to the 17th of March 2023. Despite it being a week full of important economic data events, it's not hard to know where to start. US inflation. Tuesday's US CPI report is set to spark chaos in the financial markets, with traders being increasingly nervous about another surge higher in prices. That's not all though for the US, as critical PPI, retail sales, consumer sentiment data also hits our screens. There's central bank action as well to get our heads around, with the European Central Bank taking centre stage. And along with New Zealand GDP, followed by Australian employment data, expect volatility pretty much in all markets this week. It should be a fantastic week. Let's dive into the best opportunities with our expert analyst in the States, Shane Vernier.
All right, Monday, week 11 starts with an absolute thud. There really is nothing on the economic calendar that could be considered a market driver for Monday's session. However, the previous Friday, you're coming off of NFP, and Tuesday, you've got CPI. So Monday, sort of a sandwich session, could be very slow, not much scheduled. However, I'm still going to be looking at the US 30. I think that Monday Wall Street Open is going to be fascinating and really indicative of the kind of sentiment that we're going to be dealing with, perhaps deep into Q2. So as I look at this chart, this is a long-term monthly chart. You'll notice we've got nice 3 or 4 month compression here out of the US 30. And the bottom on this market, the intermediate term swing low, has been right around 32.5. So I'm watching 32.5 closely. Now, if in fact we do break beneath that 38% retracement and really come off in a big way, I'm sort of looking at 61% as being a potential swing trade area, an area that's going to draw a lot of longs. 62%. We've got our lower Bollinger Band there as well. That's right around 31,000. I think that could be a nice buy. Maybe not Monday, but maybe Tuesday or Wednesday. Thursday could come into play if in fact the sentiment turns decisively bearish. Now on Tuesday's session, we're going to be focused on the dollar index. And why is that? Because we've got the biggest market driver out of the month, and that's US CPI. Now, the expectations are very simple. Core CPI, month over month, 0.4 expected, 0.4 previous. CPI, month over month, 0.4 expected, 0.5 previous. We are expecting that inflation, U.S. inflation, to at least come in near flat or perhaps pull back a bit. If it doesn't, it's going to drive the markets absolutely crazy. And after last week's congressional testimony from Jay Powell, a hot CPI reading will send the U.S. dollar decisively north. So let's take a look at this dollar index. And this is more long-term, really long-term analysis. But you'll notice that when we look at 2022, and more specifically 2022's range, you can see exactly what kind of year we had and how this year, 2023, is shaping up to be much different. You can see this is when all of our rate tightening began, and now we're really rallying. You can see the U.S. dollar really put in that major bull run up to that 115 area and sort of topped out in September. Since then, we've had a nice compression candle, and then we broke off on the monthly. And really, for about the past 60 days, this has been just relatively brutal consolidation between 104.62 and 102 and 102.25. Now, we have broken above that 50%, so that 104.62, 104.70 area, I would be looking at downside support. But if we do get that hawkish CPI number, meaning if CPI comes in higher than expected and inflation is still running exceedingly hot, that 38% level up there at 106.98, more than likely that 107 area will become the top of a new trading range. So I'm watching the DXY closely on Tuesday. Could be an interesting range trade, potentially sells from 107, and maybe I wouldn't do much of anything from 104.70, but I would definitely have those numbers in my mind thinking about establishing a new trading range. All that's predicated upon CPI. Wednesday, midweek trade, we're still going to be dealing with what could be one of the biggest news events of Q1, maybe even the first half of the year. This CPI number, we can't stress enough just how important it is. We say that every month, but it really is exceedingly important. So for Wednesday's economic calendar, we're going to stay in the United States. You've got retail sales and core retail sales. Retail sales is expected to drop dramatically month over month and dramatically year over year. Now, what this is going to do is it's going to really fuel that recession talk, that there's a major economic contraction going that's really comes on the heels of that ultra hawkish Fed policy. So as we look at our charts, I would be looking at gold. I think you're going to see more action out of the US dollar. Remember, as the US dollar gains some strength, those commodity prices typically take a hit. I think gold could be an active commodity for us on Wednesday's session and really define midweek trade. And once again, I'm going to fall back on my Fibonacci's here. This is a weekly spot gold chart, and it gives us a good look at the market dynamic over about the past several weeks. And you see we had a nice big spike high late January, and then February we sort of extended the bearish trend, and now we've got some compression and now perhaps a rally towards 38%, which is right up there at 1863. I like that level a lot. I think it's potentially could be a very lucrative selling point for us. So 1861, 1863, 1865, that's going to be a key resistance zone. So if I was trading gold for the coming week, I certainly would have that level marked on my chart and potentially be looking to take a short there if in fact we return to those levels. Now, Thursday's trade, we're going to turn our attention from the United States over to the European Union, and we've got a huge market-moving event again, and this is the ECB interest rate decision. Now, it's interesting because right now we're pretty much having that hawkish international game of one-upsmanship. The Fed raises rates, RBA's raising rates, RBNZ's raising rates, the EU has been, ECB's been raising rates, the BOE's been raising rates. So what happens at this ECB meeting? Are we going to be data dependent and sort of call the dogs off, or are we going to raise rates? Well, the ECB is expected to hold their deposit rate firm at 2.5% and not hike rates again. I think that may change a bit after Tuesday's CPI number, just in anticipation of what the Fed may do. But at this juncture, we're looking for the ECB to hold their rates static. That's going to be the big market driver for Thursday. So, of course, we need to be looking at the Euro USD. And what we want to point out here on the weekly time frame is you can see just exactly how compressed the last several weeks have been. We've got a doji, we've got an inside week, and we are not quite an inside week, but we've traded largely around that 106 flat area. So when I see a market like this that's in deep consolidation, first thing I'm looking for is things like moving averages, which we have a weekly moving average right around 106.25. Okay, I'm also want to maybe adjust my time frame, not necessarily down, but perhaps up. And I want to know the macro picture. And right here, you can see the macro picture. You know you have a nice big, here's 2022's range, spike high to a spike low. So we've got really a robust retracement that we're in the middle of, a nice bullish market here for about the past 4 months. Pull back there in February. Now the question for March is, where do we go? Now a lot of that depends on monetary policy. For me, I'm looking for a pullback from a macro zone, spike low to a spike high, and we're right in there at 104.57, 104.5, somewhere in there. I think could be a pretty good long, maybe even 104.75. Give ourselves an opportunity to get in on the price action should the market come our way. Could it happen on the ECB? It could happen on CPI on Tuesday. It could happen on the ECB Thursday. At this juncture, we just have to be ready for anything. I think the Euro USD, though, could be the market to watch on Thursday. Lots of action anticipated. And we'll sort of wrap our week up with in the Eurozone. Now, you've got an interesting dynamic because the ECB will have spoken on Thursday. Well, Friday's session is defined by EU CPI. We've got a collection of EU CPI numbers hitting the boards, and you've got, core CPI expected to come down to negative 0.8% month over month, and that's down from 0.8 previously. And CPI month over month, negative 0.2% expected. That's static. Previous release was negative 0.2% as well. So we're looking for a bit of improvement here in both that Tuesday and Friday's CPI numbers out of the US and the EU. We're looking for that improvement. And if we don't get it, these currencies really could go crazy. I think the euro is going to be one we're going to have to be watching the euro closely next week to see exactly how it behaves. Now, you look at this euro Great Britain pound. A lot of folks trade this. This is a rotational pair. Very difficult to get breakout trends or big moves in the Euro Great Britain pound. You'll see the last couple of months, what you have developing here, last 4 months, you almost have a spinning top formation. When you have back-to-back dojis, they call that a spinning top, and the idea is that you're going to get a breakout either to the bull or to the bear. In this instance, I'm not convinced that any breakout's coming, but what I will say is that with those kinds of market drivers in play, I would be watching last month's high very closely. Last month's high right up there at 89.78, potentially If we get up around that 89.78 level, I anticipate us going over 90 and potentially starting to fill in some of this wick. Does anybody, if you remember this wick, does anybody remember September of 2022? That was BOE intervention. That was the intervention in the pensions in the BRICS market there, or the gilts market, excuse me, in the UK. So you have a big time run up here. Will those price points be filled in? It looks to me like this is a slow grind north, but I think there is bullish breakout potential. You have sort of a rudimentary spinning top formation, and watching last month's high is right up there at 89.78. A potential bullish break is possible. So I'm going to be watching the Euro, Great Britain pound closely next week. I think there's a couple of market drivers that could send this one north, and we just sort of have to wait and see how the news cycle unfolds. So that's it from here. All right, back to you, Connor.
Thanks, Shane. So as you can probably tell, there is plenty to contend with this week, with action across the board. Really watch out for that US CPI number, as that is likely to cause significant market volatility. And you could see stock prices slump on the back of a stronger report. As always though, our team of analysts will help guide you through these opportunities every single day in the trading room, ensuring a high quality service as we cover all of the events for you in our live streams. We'll help you make the most informed trading decisions and of course, be with you every single step of the way. Until then, trade well and we'll see you on our next live stream.